Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Hi, today is May 28th, 2025, the day after the Memorial Day holiday, and today it's been a little bit quiet between US-China trade deal, so I'm going to quickly give a few comments on that, and then we'll also review some of the companies that's in headlines, such as BYD, which is the #1 car company specializing in electric vehicle in China, how it's in some of the negative headlines. And then the two other company, Pinduoduo and which is a Temu parent, and Shein, which exclusively sell to markets outside China for the lower price goods such as clothing and other household items. First, a bit about the trade deal. I think after the meeting of US-China that kind of walked back to 10% on Chinese goods, the extra 20% fentanyl, China did not retaliate on tariff rate, and some of the sectorial tariffs. So the average tariff on Chinese goods overall now is about 45%, depends on particular goods. And then the other is that these small packages that companies like Temu and Shein, which stem from China right now, depends on the day-to-day environment. It's either $100, or $150 tag on extra tariff. So again, I think right now the U.S. strategy is clear that it wants to walk back a little bit so that the economy is not as impacted, while also trying to negotiate with other parties. So for example, over the weekend, President Trump put 50% tariff on EU and then walked it back. So a lot of this is US trying to get the deal with other countries and then refocus back on China. So in that sense, it's going to be a challenge for China because the things that the U.S. negotiate and it's hoping to negotiate is to build up a somewhat I would say not necessarily very strong, but somewhat strong in the U.S. kind of a tariff war, which is like 10% for every country, every other country, and maybe like 30 to 40% on Chinese goods. Now, what's tricky is, will U.S., able to convince other countries to build this tariff war? I think so far the success is mixed. I think that it's also understandable because for other countries, it just doesn't have the kind of economy that the U.S. is having. U.S. can get some of the inflation, can get some of the substitute higher price. And U.S. is a very rich country, so the way to pay a little bit more for goods is easier. But a lot of other countries, their economy is not as good as the U.S. and the people there are not necessarily as rich as a typical American. So for U.S. to pressuring other countries to build a tariff war on Chinese goods is not necessarily going to be good for the other countries. So they are going to resist. And as you can see, some of the countries like Japan essentially kind of suggest that they'd rather pay the tariff instead of negotiating, which essentially is suggesting that the other things that U.S. wanted, the non-tariff concessions, is not coming along as good as the U.S. wanted. But ultimately, I think U.S. will make a deal with them and then refocus back on China. So that's what we expect. So that's why you don't really hear much about U.S.-China negotiation, because a lot of those negotiations is also contingent on how the economy is doing in the U.S. and how U.S. are doing deals with other countries and regions. The other two things, that's in the grand scheme of geopolitics, they are all related. But so one of the top Chinese company, BYD, is getting some really negative headlines. The one negative headline is that its sales data, China, the government is questioning that whether they are masking some of the sales numbers because they label new car companies as secondary sales. So they are being investigated by the government. The second thing is that they have this across board, some of them deep cuts, like 37% discount on cars. They are trying to grab market share from the other electric vehicle car companies. They are close to 5 or 10. So is that something which the Chinese government will tolerate? Because in the other case of JD and Meituan, delivery food delivery business, the government actually came out and against this kind of purely price competition for two reasons. One is purely price competition is quite brutal in a deflationary environment. So it might be good for the company, but the overall, China is facing zero inflation or deflationary environment. And, this pure price-based competition is adding pressure on the negative inflation rate that the government didn't want. So they may not be as happy that the BYD is doing this. And then the third thing is that some of the, debt of BYD is being called into question. How leveraged the company is in its expansion. And I think in this is probably a little bit overblown because there were, two negative news and people just tagging on a third negative news. But in the sentiment wise, I think people will realize that BYD also having some of the negative headlines in China. The other two companies, I think the Temu parent, Pinduoduo and Shein. Shein just announced it's going to list in Hong Kong. That's also an interesting question because Shein for a long time want to position that it's not a Chinese company and it was thinking of listing in non-Chinese territory, like, essentially not listing in Hong Kong on Chinese shares. And I think the government is not very happy that they're trying to disassociate itself from being a Chinese firm, even though most of their operation and most of their production is in China. But they are having also other outside China production as well. But ultimately, Shein decided to IPO in Hong Kong. So that actually gives a little bit more good positive for the city of Hong Kong, since in the last couple of years they've been in a very negative headline. In their competition for financial industry, they've lost a lot of big clients to Singapore. And with, Hong Kong is now increasingly being sanctioned by the US as part of China. So to be able to have these IPOs in Hong Kong is a plus for Hong Kong. The other related thing is that some of the US listed Chinese companies may have to delist, and there are several of them are actively, doing the dual listing in Hong Kong, because if they have dual listing, then they could easily give, Hong Kong listed shares to the US listed shares. So again, that is another front. And then as you can see, the competition is very fierce in China, and then the profit margin is low, and that's kept, Chinese equity to a certain degree. So I think all in all, our baseline is still similar, that Chinese equity definitely have a lot of regulatory risk from US, from China, and also difficulty to sell outside US and China. On the other hand, Chinese companies has proven quite resilient, whether in innovation, whether in selling. And one of the, the next thing in the next couple of years is how successful these companies are going to expand into local markets, not through export. So if last 20 years, China has built an export engine. The next 5 years, most of the Chinese companies are expanding, building up local businesses, hiring local people to setting up local infrastructure. So how successful that will be, it's still remain to be seen. So I think China equity is still a high risk, but also with all these different headlines that creates trading opportunities. In the future we can talk a little bit in terms of the companies just within the car companies. In the end, there will be 2 or 3 car companies that's going to make it and then become dominant. And then just like the US in the 1920s, US has many car companies, and then in the end, 3 or 4 brands and companies won. So ultimately, we can go in the future. I'll talk a little bit more about these kind of companies within the particular industry group, and some of the companies has won and some of the companies has lost. So I think all this creates opportunity for people who are good with stock selection. So that's pretty much all we have for today. Again, we on all the platforms, Apple, Spotify. It's on our website, wisdomtree.com, under the US site. You can listen to us. I'm on Twitter. You can leave messages in terms of the kinds of topics that you are interested in, and I'll try to my best knowledge to try to cover them. Thank you.